What up, guys? Welcome back to RT2CC Comic Club. Justin here, and this is going to be a 2-day recap. We're going back to the 2-day recaps, and I really do apologize. I feel like shit at how bad I am at keeping up with this. But like I said in a prior video, I'm going to try to sprinkle in a lot of up-to-date videos as I catch up with these. And so I promise you won't see more than 3 or 4 of these before you'll see actual current video. So pretty soon I'll be making another video updating what's going on in late October. So I promise you guys will get some up-to-date information. But I do want to keep up with this just because I think it's cool to see how I got to where I got and what trials and tribulations I stumbled upon on the way, and what decisions I made and stuff like that, just to help you guys who are just starting out. So let's just get into it. On the 13th, I'm going to go really fast though with these. I'm going to try to go really fast. So the stocks as a whole on this day did pretty well. The Dow went up 94 points, and the Nasdaq went up a couple points. These 2 days we didn't really make a whole lot of money, so I'm going to quickly show you guys the winners. On the 13th, Friday the July 13th, our biggest percentage gainer was Stamps.com, and our biggest dollar gainer was Amazon. And then our biggest losers, as you can see here, was Netflix, and same with the percentage. So if you want to pause the video, you can look at the positions. These are almost all the positions I have at this point in time. And so let's go to the second day. I'll just go straight to the stocks. So the stocks did okay. Again, pretty flat. Dow finished up, the Nasdaq finished down. And then our top winners for this day, we had Amazon again, and then Boeing did pretty well for us that day, percentage-wise. And then our losers, we didn't have too many as well. Tesla did bad for us, and then Adobe also did bad. Percentage-wise, probably Alcoa. But yeah, so now let's just get into the articles, because I do want to talk about one that I think could be still very relevant, even in October. The first one is about Amazon versus Netflix, and who is a better company to invest in, or which is the better company to invest in. And the author of this article brought up some really good points. What he did was he analyzed three basic categories. He analyzed their competitive advantage, their valuation, and something else. Hold on one second. Let me just quickly bring it up here. So yeah, so the financial fortitude he brought up, and then valuation, and then competitive advantages. So I'll kind of summarize it for you in case you don't want to read it. But in terms of financial fortitude, Amazon has cash of $26 billion versus Netflix's $2.6 billion. And then Amazon also has more debt, but they also have a positive cash flow of $5 billion versus Netflix, who's negative $1.8 billion. So he gave the winner to Amazon for that category. And then in valuation, it was pretty much a wash, because both of them are astronomically high. Their PE ratios, Netflix 262, Amazon 274, which is really high. So a lot of fundamental investors stay away from these stocks because they think those numbers are just too off the charts for them to risk any of their money. But a lot of people still do invest in them as a growth stock, including me. So now the last category, sustainable competitive advantages. This is where he brought really good points. Obviously, Netflix has a really big moat, meaning they have a really good safeguard against competitors just because they have so much good content, and they invest so much money in content, and they have so much money to invest. And what this guy talked about was one of the network effects that Netflix has, because as they get more and more subscribers, they have more and more cash to buy more content, which in turn brings more subscribers, and it's a nice, good cycle for them to keep repeating. Now with Amazon, they have a really good, strong brand value. They're the 5th most valuable brand in the world, worth roughly $70 billion at the time of this writing. And then they have low-cost production. Amazon's one of the few companies that can offer same-day shipping. And they might even lose money sometimes on some of these shipping things, but they have so much, it helps them to drive out competitors by beating them in shipping, which a lot of people nowadays are really impatient. They don't like to wait. So Amazon has a really huge leg up in that regard. And so it's really hard to compete against them because they just have distribution centers everywhere. They have so much money invested in that and the logistics that they can do that. Now, with network effects for them, third parties, to help get their sales up, they'll also list on Amazon, which kind of just helps bring more users to Amazon and helps Amazon make more money. And then lastly, high switching costs. It's hard to find a service like Amazon that can offer that kind of low cost for products, low cost for shipping, free shipping, fast shipping, and then all the other services they provide, like Prime Video, like food delivery with Whole Foods now. So the clear winner in this regard was Amazon. And so at the end of the day, this particular author thinks Amazon is the better buy over Netflix. I personally like them both, but I do see his point because Amazon has a lot more to offer in terms of just overall quality of life stuff. Netflix is just purely entertainment, whereas Amazon, I mean, you can get anything. So even entertainment. So yeah, but I still, obviously, I like both because I love the shows on Netflix. By the way, Big Mouth Season 2, I think I talked about it before, I forget, but hilarious. I watched the whole season in like 3 days. But anyways, while I was working, I was trying to multitask. But anyways, let's go to the next article here about Tesla. This was basically about they hit their key deliveries for 200,000 vehicles, which that means the federal tax credit does get paid out. You probably already know this by now. But again, you need to take delivery for your Tesla before January 1st to qualify for that tax credit of $7,500, and then it gets cut in half between January 1st and June 30th of next year, and then July to December it gets cut in half again. So you're only looking at $1,875 tax credit if you do it like a year from now. But anyways, the thing that I'm really excited about is their deliveries, and I'm sure you've all heard this already, how much more deliveries they've been able to do in Q3 versus Q2. And at this time, the article was talking about Q2 deliveries. They delivered 40,000 vehicles, and they're delivering a lot more now, and I imagine they're going to deliver even more in Q4. So I'm just really, really excited about that. And some of my current positions, I do have a lot of Tesla calls. Not a lot, but like more than I usually do, just because I'm expecting a good earnings report on November 7th. So that's why I kind of loaded up on Amazon calls with all that price drop that happened. So we'll get to that in future videos, but you already know what happens. Anyways, July 16th, Amazon, I didn't know this, but apparently Amazon had like a glitch during Prime Day. I didn't know that. I totally wasn't really paying attention, but like there was like an error message about like with dogs on it, pictures of dogs, and this article headline was Amazon hopes its Prime Day doesn't go to the dogs, but they were able to fix that. They did maybe lose some potential Prime customers at that, but at the end of the day, they're Amazon, they're going to get new customers regardless, and so this kind of headline wasn't really that important in the grand scheme of things, but I just thought it was interesting. This other article I thought was interesting was Walmart and Microsoft deepen their partnership to take on Amazon. Again, I didn't know this, I wasn't paying attention, so I totally missed this piece of information. So if you're like me and you're, looking up your own companies that you're investing in, maybe you missed this and maybe this is good information for you. So that's why I'm hoping it's still relevant. Again, I apologize it being so late, but still, Walmart agreed to use Microsoft's cloud technology to power functions that can include their algorithms for purchasing and sales data sharing with vendors. Now, the CEO of Microsoft said the shared rivalry with Amazon was core to this decision to partner up with Walmart. So obviously, they don't like Amazon, and they want to kind of compete, but it's hard for them to compete by themselves just because of how big Amazon is. And so yeah, so finally Netflix shares tank after a big miss on subscriber growth. It's kind of funny I'm talking about this now because it's 3 months later. They had a really good earnings report on subscribers, and their stock went up, although the volatility and all the aggregate macro stuff going on kind of pushed it back down. But I still was bullish on Netflix, even at this point in time. So at this point in time, the Netflix, they were predicting like something like over 6 million subscribers, but they hit 5.2 million customers. And I personally, and you'll see this in the video comes after this, I did buy some new Netflix calls when I saw this, because whenever Netflix does a huge drop, I always see it as a buying opportunity. That's my personal financial advisor, way of looking at it. I like Netflix, so whenever they have a big drop, I see it as a good buying opportunity. So I ended up buying Netflix calls right after this happened, and you'll see in the next video what happened with that. But it, I think I'm still holding that call. I'm not sure. But anyways, that was what happened. Reed Hastings did say that the fundamentals have never been stronger, and I think that's very positive because a lot of people do look at fundamentals, but with Netflix, it's weird. A lot of people just they just blindly focus on subscribers, and that's it. Obviously, that's a huge part, but again, you can't forget that as long as they're adding more subscribers in a good, healthy rate, that's still good. So what if they miss their estimate by a little bit? I don't think that's a huge deal in the grand scheme of things. They still have a lot of markets they haven't really broken into yet, or they're currently breaking into, and they have a lot of new content which they can merchandise. Again, they can make a lot more revenue as they grow and get their own content. They can expand their revenue streams, not just from subscriptions. Having said that, subscriptions are still cheap. Even their 4K subscription package is still like $13 a month. Once I do get a new TV, like I want to get an OLED TV as my next TV. Once I do that, I am going to subscribe to their 4K subscription because I want, hopefully by that time, there'll be a lot more content. And I just love watching stuff in 4K. I think everyone does. So that's my plan. And we're going to leave it at that. So if you like this video, please hit that subscribe button and like it if you haven't. What do I say? Please like the video if you liked it and subscribe if you haven't already. And again, thank you guys so much for sticking with me. I'm going to be making a video this weekend about the cannabis thing and like my update with those calls that I bought. And so that'll be an up-to-date video. And hope you guys like it. So thank you guys so much for watching. Hope you have a good night, and we'll see you tomorrow.